Like we are live again. I'll just get started again and go through it. Thanks a lot for everyone tuning in. Today I have a special guest, Andrea, which we'll go and do an introduction to in a little while. And yeah, it's Andrea's first Facebook Live. And
First Facebook Live, yeah.
You've never done a Facebook Live on your own Facebook?
Never, not even on my own Facebook. Yeah, no, first time.
You've watched a lot of these Facebook Lives.
I've watched heaps.
That's why I thought
It's a bit strange being on this side of the camera. It's good.
It's all different. The back end's different.
It is a little
Everything's
bit
different.
Yeah.
So today we'll get into our standard sort of stuff. I'm going to talk about the news, the media, what's going on out there in the big wide world. I'll get straight into Andrea's story as well. But I'm going to talk about the elephant in the room because today is interest rate day, and interest rates have gone up. They've gone up from 285 basis points to 310 basis points. And I always say if I do something wrong or if I have messed up, I don't believe I fully messed up, so I'm not putting a disclaimer or trying to discredit from that, but I said that interest rates weren't going to go up today, and interest rates went up 25 basis points. There's probably a 45% chance that interest rates would go up, and they actioned that, and I'll explain what I've been looking at in order to come up with that conclusion. I've been following this chart now for a period of about 14 years. Just before the GFC in 2007 or about 2007, it was probably 15 years ago, I got scared of interest rates, and I locked in interest rates because I thought, everyone's saying they could go to 20%. I fixed my interest rates at 8.65%, and it was fixed for 5 years. And that really screwed me up because I went down basically from the day on. Yeah. And then, basically I followed this chart. I found this chart, which is 30-day interbank cash rate futures chart. I look at this on I wouldn't say a daily basis, but probably like 10 days a month or so. At about 7 o'clock every day, it updates. And these trends, like you've got all these smart economists saying, interest rate's going to go to 5%, all that sort of stuff. We're going to already see a change reversal on the tail end. This is pushed out about 18 months from now, and this is where we're at today. Yesterday, if we have a look here, this was taken from yesterday. It says 296 basis points. 296 basis points. We were at 285 basis points. So this was predicting that for December that we would be 11 basis points over the current cash rate at the time, which was 285. So I've seen this every time I've looked at it go from there's a 25 basis points movement that it goes. If it's 13 or over, it'll go up. And if it's under 12 or under, it won't go up. And this was at 11 yesterday, and now it's just decided to go up. So interest rates have gone up. But if we look at the longer end, you can see that this top upper end here is now sitting below 3.6% or 360 basis points. Every time I go to a shop, I go and ask them, what's happening? It's Christmas. Are you busy with sales and stuff like that? You got lots of friends in retail. Did they say it's busy?
Yeah, it's been busy. Yeah, okay. Absolutely. Yeah.
Interesting. I was asking some shops the other day about how things have been. I was actually talking to my sister-in-law. She works in a jewelry shop, and she said it's the quietest Christmas she's ever seen in retail. She's been in a job for like over 10 years now, and just very ominous signs that there's a recession coming, and not that there's a recession coming. I actually believe we're already very deeply in that recession, but I'm still 100% confident. Every time I put my money in, my commentary on the line is basically me putting my reputation on the line, right? And today I might look like an idiot, but when we fast forward 6 months, 12 months, 24 months, I can't win them all. And that one now, I thought I was very, very confident, but it's something that, as I said, they've increased the rates, but that doesn't mean. I did say, actually, if I go back a month ago, I said that they could increase it another one, whatever. But either way, we've gone way too far. They've taken us way off track. Everyone is feeling the pinch out there. Not just in the world that I see, just in general, like you see it in retail and all that. So it's very important to go and look at all the signs and all the indicators around you. And, this is pretty flat, right? Like if you think it's going to go skyrocket and, to the moon, like Bitcoiners would say, then, it's very, very not going to happen that way. So keep an eye on that. I'll post the links to it in the Birch feed constantly. Just making sure everyone can still hear us and then all that. Got some fans here that saying great to meet you as well. So yeah, good stuff. Good stuff. So first news article today is just backing up what I'm saying here. This one I found quite interesting yesterday. News.com. I feel like it's like when you watch the gossip, like when you're a kid, you'd see like TV Week or Women's Weekly or New Idea or something. I don't know. Just remember
You
as a
mean
kid.
when you're a kid, I still have them. They're on my desk.
Oh, do you? Wow. I don't know. I remember my mum would always get the TV guide, right?
Yeah.
And it'd be like soap opera, right? What's happening at home and away this week, right? And I feel like our news that we get fed is very much like that, right? It's very, interesting. Like my mum has been staying with me for a lot lately. I've got to go look after her tonight. She's has been well on a health front, and she loves watching the news. And she watches the news, and I sit in the room, and I'm like, fuck, this stuff's like really depressing, right? And I see what they put on there. I'm like, how are they programming people with this?
They
Right? A
are,
lot of people
yeah.
are awake to it today, but so many people aren't. But I look at this and it's fun. But this one here is an article from news.com. It says ING slashes fixed term interest rates. So it goes on to say the RBA is expected to raise rates tomorrow. It's in previous tense. It goes on to read, one of Australia's major banks is slashing its fixed-term long-term deals despite predictions that RBA will lift its cash rate on Tuesday. ING will decrease most of its fixed rates for both owner-occupiers and investors after tomorrow. The fixed rate loans for 1 year won't have reduced because obviously the rates aren't going to have that much of an impact. However, those that want to fix their rates for 2 or 3 years will be offered a rate that is 0.2% lower, which is 20 basis points lower than where it is at the moment. So they're dropping the long-term interest rate. And you've got to think to yourself, these guys have access to all the data that we don't, right? They have access to what's happening out there, that where they're getting their money from, where are they getting their funds from? It's from private markets, from institutional investors, it's from all different locations. And they have the data. They're taking bets. When you go to the bank and you're fixing your interest rates, you're taking a bet against what the bank is going to do. And to start seeing articles coming out that banks are dropping their interest rates on fixed rates is a very obvious sign that in the future, they're factoring that into their margin. They're going, hang on a second, this ain't going to be there forever. So just interesting to see, interesting to observe. So there goes one bank, ING. Let's see what the other banks do. I just throw them. That's why the floor's always got a mess in it. Huh? So this one here is the second article today, which is, main thing is just the interesting world that we live in today. Just says here, career cushioning, how half the Australian workers are making insurance policy as uncertainty looms. So we're seeing interest rates rise because we're living in such a great economy. We've got so many great things happening, etc. We now are seeing articles coming out about people that are prepping for the ability for their work to go broke. So let's just read this. Feel bad about shopping around or making yourself more employable for another job? Well, you're not alone. Over half Aussies are cushioning their careers in case of a redundancy, news research shows, right? Professionals across Australia are seeking out new skills and cultivating their networks to brace for challenging economic times ahead, right? The trend career cushioning has emerged in recent years, but according to LinkedIn polling, almost 2,000 Australian workers, 53% are hedging their bets with an employment insurance policy. Further data shows that there may be a merit to the concerns, with the national hiring rate down from 14% year on year and 29% of Australians employers saying they plan to cut staff, right? So now we've got 29% of employers out there looking to cut staff. There's 14% lower amount of hiring right now, and that it found that there's 10% currently comfortable with the job. Doesn't really bother me with that. But what is interesting is that they're now publicising this stuff, right? And it's like, why are they talking about, people being worried about their jobs, right?
Yeah.
Because the talks on the street are businesses are looking to cut staff. We're seeing it every week in the news that people are cutting the staff out there. And, how can you have rising expenses, rising interest rates, rising food, rising this, everything's being inflated away. It's actually hurting the businesses before they put up interest rates, before shoppers stop spending. And if you go out there, start asking the questions, you're starting to see, a slowdown, right? Like tradies are being more nicer, right? The arrogance has been on tradies the last few years. It's like, they don't answer your phone. And now it's like, you got any jobs for me? It's like, you're back, are you? It's good. So, and this one he's a little bit late anyway to the party, so we'll just touch on this very quickly. This one here is Xmas Christmas killer. Warning as the RBA is poised to raise interest rates again, which they've raised today. I really did not see that one coming. There was a 45% chance that it would happen, but I'm still on the side that I've seen this happen so many times. So this is like just, they've way overshot it. So the more broken that they're going to make this system, the more fixing up they're going to have to do, the more stimulus packages are going to have to occur in the future. So it's just exciting. So just my thoughts on that. If you guys have any questions, flick the questions below. I will answer them, and we will get into talking to Andrea. So got lots of questions for you, putting Andrea in the hot seat.
You are.
So what do you do, Andrea? Like, why are you here? Like, what do you do? Like, what do you do for work now?
So now I'm working at Blink. Yeah, I love it. Property manager at Blink for the last year this week.
A year this week? Really?
Yeah,
okay.
Yeah,
there you go.
Sunday.
What a surprise.
Yeah.
Sunday. Okay.
Sunday.
Happy 1 year.
Thank
there we
you.
go.
Loving it. So I moved from Melbourne. So my original position, I actually did years and years as a retail manager. So all the big box retailers, Officeworks, Coles, Freedom Furniture, all that sort of stuff.
Yeah.
Managed those. Did a bit of property. I did about 6 years worth of property in Victoria. So my sub-agent's license there. And been following you for a bit, and then decided to move to Sydney last year.
Okay, and we're looking for staff, and it's the thing in the community out there, right? There are people watching going, Birchy seems like a good boss, or, I like some of the weird things he says, or whatever.
He's all right. No, he's amazing. Honestly,
you.
You're exactly like what we see on the videos. He comes in, he's very, very cool.
With my rat's tail out.
With your rat's tail out,
and the thongs on, and just say it as it is.
Very natural. No, it's good.
Cool. And so you so you were watching on the other side of Facebook, you're listening to the podcast. How did you come across what B.Invested?
B.Invested.
Yeah.
So I had just purchased my first property in Melbourne, and so it's in country Victoria.
Okay.
And I was taking a couple of weeks off work because I was having surgery, so I was looking for some podcasts to listen to and that sort of thing. And being that I just purchased the first property, it was still due to settle.
Yeah.
I was Googling property investors, property investment, all that sort of stuff, and your name kept coming up. I'm like, who is this dude? I listened to that first. Yeah. So you were a guest on someone else's.
What is your first property? So you're an investor, you've just bought your first property.
I have,
learning. You've said you've seen other podcasts. What was different? What did you learn? What was your goal? What are you trying to do?
Look, to be honest with you, my goal first, so I used to work for a different property company over in Melbourne, so just doing opens and stuff like that. And literally all the people there literally had 1 or 2 properties. And that was kind of my goal, I thought, I'll get a couple of properties, it'll be fine. We'll live in one, we'll rent the other one out. Perfect. And it was only literally when I started listening to you, I'm like, what? These people are like 20, 50, 200, crazy numbers. And that's when my views started to change. So I had people telling me, you bought the wrong property, why did you buy there? I had people telling me just my strategy was all wrong, and I didn't have a strategy at the time. I bought what I could afford, same as your first one. But it's worked out. And
what was the price that you paid for the property?
170,000.
170K.
In country Victoria.
Okay. And what's the rent for now?
It rents for $295.
$295. Okay. Cool.
Now. So $295.
And what's it worth if you don't mind asking?
No. It's gone up to 310.
Okay. Cool.
Yeah, it's gone up to 310 the last time I had it valued. So it's had really good growth on it, which has been awesome, fantastic, and
cool. Crack that equity open.
Well, we're nearly ready to go, aren't we?
That's good.
Ready to go. So I'm very excited. Yeah.
Cool. And do you have I had a little couple of questions here, but I was just thinking off the cuff, always bring up random questions. Like when you bought it, you had the original goal, so was to buy 1 or 2.
Yep, one or two.
What's the goal?
What's the goal now? Oh my God, the sky's the limit. Honestly, wherever we can take it.
Okay,
I don't have a limit anymore. I've seen what your investors, your clients have reached and done. Sheila at the Christmas party, that was so inspiring. And I've seen what people in the office have done. Like there's people, investors in here, and you go, oh, wow, like it blows your mind what you've done for people. It's amazing.
I guess I never look at it from that perspective. I'm just so caught up in it. And I talk about buying properties like they're packets of chips, right? And they're just like, just buy 2, just get 2 sorted, get 3 sorted, you'll be right. Like, 3, what the fuck? I'm never going to get 2. But there's the sayings like that if you're 4 best mates are broke, you're going to be the 5th one, right?
I agree,
and I guess the opposite, right? If you've got people that are around you, you want to. I was on the phone to someone doing a map session today, and the guy said to me, he goes, "You're inspiring. You want to level. You make me want to level up." And I was like, I don't see it like that. I'm just like hustling. I put stuff out there. I'm like, this is what I'm doing. This is what's happening, and it's cool. So I guess. The culture inside the business, you can go into some business and then like, oh yeah, I hate my life and this is bad and that's bad and whatever. It's like I was actually motivated when I first started because I was like, I hated my job, I hated everything about my life, and I'm like, I need to get the fuck out of this, I need to change it, and that's what motivated me. But being around like people, I guess that's the culture that breeds, and we need to make sure that we're doing the same things that our investors are doing.
Absolutely,
so we can share that journey.
For sure. And you see all the issues. Like I know I've had heaps of issues, with my properties. Not in regard to the property itself, but like little mistakes that you make in finance along the way. And that's the sort of stuff that we now.
What would be the mistakes that you've made, the things that you can look back in hindsight so that you can change?
Yeah. I had a second property. So I had a second property with my ex-partner, and we sold when we broke up, but didn't realise that the property was actually cross-collateralised. So that was a mega mistake. Yeah, that was a big mistake.
Should have spoke to Rose before you broke up.
I know.
But
yeah, absolutely. Yeah, so that was a big one. So when we went to sell the property, they had to value both properties.
Okay.
And my legal person actually said to me, if something's wrong with the value of the first property, you may not get the excess from the sale. It could actually go. And I was, little things that you just don't know that you tweak.
So it's not, I always say you should have a debt strategy, right? It's not just about having the acquisition strategy. Everyone just thinks about, okay, I'll buy some properties. How do I get my next one? How do I get my next one? But it's like, if you plan it out, you go, okay, cool. And just as you said, you paid 170, it's worth 310. These are the numbers because we're talking about, how we're going to get to where we're going to go to in the next steps. Just thinking that, I'm thinking, okay, you can do 3 more, right?
Yeah.
It's like instantly.
That's what you said to me that day.
Yeah, I was still
thinking
it.
Funny. It was very flip because you said to me, you were so calm, and I said, "This is how much equity I think I've got." And you went, "Oh yeah, that's 3 properties." Like it was not like it was nothing.
Yeah.
And that was all.
So 3. I want to get for that one.
3 what?
Yeah, cool.
Yeah, no, it's good.
And so that was one issue. Has there been any other challenges along the way or things that you learned?
I think the first one's probably my mistake. I actually put more than 20% in the first property.
Okay.
As in deposit. And the lady. So I went to the bank, I went to one of the big 4 banks. She's like, it's fine, just take it out when you want to go for number 2, take it out as party equity. I'm like, still trying to get it out.
Yeah.
But we'll get there. We're very close now.
Cool. Have you spoken to Rose lately? And you got the others?
Seen her in the office the other day, but we'll have a good chat shortly.
When you work, you can go find all these people and go at your disposal. Yeah. So cool. You're on speed dial.
Yeah.
And I guess so you've gone from getting into property, working out a strategy which was just hope and just making things happen, taking action. And I think that's where people get stuck. There's people that probably watch these videos for 5 years and do nothing, 10 years and do nothing. You've seen the Christmas party that we had. There was like hundreds of people.
It was so inspiring.
Yeah like even really to myself, I was like, fuck, like there's like $1 billion in the room, right? That we've created in the last few years. So you've gone from that to coming on board, working in property management, bringing your experience from retail, as well as 6 years of property management experience as well. In Sydney. What made you come to Blink? What are you doing at Blink?
It's just different. So we're a team of 3 at Blink, and I majorly look after leasing. So that's my kind of role. Chris oversees the entire portfolio. So he makes sure that Max and I, keeping in check and doing the right thing. And Max looks after maintenance, and then we share the rent reviews and everything. So cool. But leasing's my main role at Blink.
Cool. And the thing I've noticed, right, and it's putting it publicly, like I've been running my first job. I had a fish shop. A lot of people may know that. I had a fish shop growing up. I worked in goldfish, tropical fish, all that. And like Deuce Bigelow style, not really Deuce Bigelow, but working in an aquarium, catching the fish up, all that, right? And then my first real job out of that, as a family business, was working in property management. I thought it was like, I want to be real estate agent,
Did you like it?
No, I hated it. I hated it, right? I hated it. And then I got out of it, and I just worked in jobs to get my portfolio built. And then I quit my job at 24, and then I built the B.Invested group. And then for about 10 years ago, I started the Blink brand. And building out the Blink brand, it's taken me a long time to get the right culture, the right people.
You need the right people as a property manager, 100%.
On a daily basis, like I always joke to people, I'm joking, but I'm serious about it. When I do property management, I look at it that I'm running a charity. I'm not doing it as a business, right? If I did it for a business, I could do other things to make money, right? But the service of what we do needs to be different, because there's pro landlords and there's pro tenants out there. And we need to make sure that the ecosystem's in place, but we've got the right people, because there's so many times if you don't have the right team, the right strategy, and I've had, I'd hate to admit it, probably like 500 staff throughout all of my property management businesses over the years. And like, we've got staff in all random locations everywhere around Australia. But, I've had really good staff that I've had to see go. And I've seen really terrible people that I would, if I was driving my car, I'd probably, swerve to, go and get them. Because it's been a tough gig, and it attracts certain types of people in the property management. And generally, property management is, you said that you came from real estate and you didn't realize that there was another side to it, right? And you worked in like one of the major brands.
I did. Yeah, I worked in a Ray White. Yeah,
Ray White.
Ray White, so, and I don't know if you have them here, Stockdale Lego.
I've heard Stockdale Lego, but we don't have them in Sydney. Or there's just a Melbourne thing, I think. Yeah. Or border town style thing. But when you look at the investors that you look after today, and you look at the investors that you looked after in a branded sort of real estate office, what's the mindset? Like, you've got the sales team, and you've got property management out the back corner, right?
You do, yeah.
You've got, what would normally happen on a rent review in a normal real estate office? Like, oh, fuck, you've got to put the rent up.
Oh, look, yeah, it's not much. People will put it up marginally, but there's no... Like, we work with investors day to day. We see people building really big portfolios, and we help to do that by, we aggressively put up the rent. Well, not aggressively, but like, I think we put a lot more effort into sourcing and making sure that the rent is in the right place and how it should be than probably a lot of others. Yeah. Because we do have that background with B.Invested and
like nurturing the tenants, getting the framework right. Like, if you don't get the right tenants in the property, then
you're in trouble from
you're not going to get the right rent. Exactly. Yeah.
Exactly.
If you don't have the right people with the right mindset, like, I walk around like, let's push up rents, right? We're pushing up rents constantly. I come into the team and like, put this up. And I've to build out a business like what we have, it's taken a very long time to get the right team, the right culture, the right people. And one thing I know with what you do is that you've got the love. Like, I haven't seen the tenants. Like, we are very pro landlord, right? Our investors are getting great results. Our rents have been rising a lot, all that. But I see that the tenants, you're keeping the tenants happy. And when the tenants are happy, they feel an obligation to go, okay, I better pay my rent on time. I better keep it right. We've gone from getting bad reviews to getting good reviews, especially from the tenants going, thanks a lot, you worked with us, whatever. Yeah. So we're very pro landlord, which is very different. How we look at the yields that we bring our investors, we look at, okay, how can we push an extra $20? We're literally having a chat just before we went live, talking about an investor. And it's like, okay, we've got an X amount of rent coming through. Let's put it on for a certain time frame of the lease, so then we can exceed their rental return, what they can get today in 3 months or 6 months time. And I don't think many real estate offices would do that. And I think that a really good example, I just did a deal for someone today or yesterday, and it was $155,000 property, and it had a tenant in it for $230 per week. And it should rent for, the lease runs out in February, and the rent should be $350 a week. This is in Queensland. And the agent has signed up the tenant at $250 a week for another year. So it goes to March 2024 now, right? Wow. Yeah. So they've signed them up, which they didn't even need to sign them up again. They've signed it up. you've screwed up the cash flow by $100 a week. That's $5,000 a year. So I see pro tenant agents out there, and this is like a tenant is, someone just said the Matrix is after you. You got no idea, right? You got no idea. The phone's not working. It's like it's all happening today. So looking at the agents that are out there, you can have a pro tenant, you can have a pro landlord. We're very pro landlord. We just did a deal the other day or yesterday. It was $155,000. The tenant was signed up for $220 or $230 per week. The rent got pushed up to $250 a week, but it should be $350 a week, $330 a week, whatever it is. It should be $100 more than where we are today. And the agent has screwed up the owner. We've been able to get the property cheap, and it's just a part of the world that we live in out there. So looking at Blink, like you've come on board, you've been seeing everything that happens out there. You've had experience in real estate. You've seen investors, you've got a strategy, you've been watching podcasts and different things out there. What is your role now at Blink? Like, what do you do?
Leasing mainly.
Leasing?
Yeah, so we've split it up. We're only a small team. So the New South Wales team's got three people. So you would have spoken to Max and Chris in the past if you've been in contact with Blink. So I look after leasing, and Max looks after all the maintenance, and Chris oversees the whole portfolio and new business and so forth. Yeah.
Cool. And we've got there's when we say we've got the team, there's like they're the property manager. We've got like a big team around. You've got like the accounts team that you have. Then we've got the compliance from the legal team. We've got the marketing. We've got all the background.
Yeah, absolutely.
Cool. And what sets us apart, like from your experience working these other agencies that are out there, what sets Blink apart differently? What would be the top three things?
I think top three, I think one would be our rent. So we really make sure that, we're getting our rents correct, and that we're optimizing the amount of rent that we can get our investors. Mainly because we know the portfolios that they build, and, we want them to have their cash flow. I think the other thing, it's one of the other things.
I guess understanding the owners.
Absolutely. Like, we have really good relationship with our owners, and in contact, not just in the times when people are leasing or so forth, but we have touch points throughout the year, and
strategy around accumulation, understanding how finance works, and
exactly right. Right. Well, I think a lot of the others are like mum and dad investors that your normal whereas here, a lot of the investors have huge portfolios.
You see, the way I see Blink and what we do with the property management team here is that Blink is more of the customer service to make sure that the client's journey is successful and profitable and very good. Whereas the love to the client's end goal in a real estate office, I don't think any of the other real estate. I've seen so many real estate offices over the years. I've got 28,000 real estate agents in my database that I communicate with. I don't think that any real estate agent has ever asked any of our clients or myself, what is your goals as an investor, right? Absolutely. Like, what are you trying to achieve? How's this property?
Verify that we never did. Yeah, absolutely. We never did. Well, I certainly didn't in the others, and I wasn't taught to either. Yeah.
I've never seen any of the property management staff that have been experienced that come to us that have looked at that from that perspective. It's always like, whoa, there's something different here, right? And that's what we need to, to get, because I see how we run our business should be more like a hedge fund manager rather than a real estate agent that's just property management second best, and the owner of it, they can just pay for it and all that sort of stuff. What sort of processes do you go through when you're finding a tenant? Like I've found when you told me with my properties, like Tregear, that one out there, you came to me and the tenant moved out at like 3:30. You go, hey Nathan, I've got your tenant at 3:80 or 3:60 or something straight away.
Absolutely.
How do you go about nurturing those tenants to ensure that we're getting the great rental results, we're getting the properties leased in a shorter period? Like what sort of things do you do?
Look, I think it's really important to match the tenant and the property. So make sure the property is right for them. We ask a lot of questions at the open. So we really build a relationship from the get-go, and we can sort of see who may be a quality tenant and may not be. We ask them a lot of questions around their lifestyle and so forth. And then, after the application process is where it really begins. So making sure that they are a quality tenant. So, you know, that they've never defaulted on rent, that they're paying their rent and never done malicious damage or anything like that. You want someone who's pretty low maintenance. I think it's
and the presentation of himself, how they carry himself,
absolutely,
how they construct an email, the character.
But you can be fooled by that too. I've had people come in there in, you know, shaky pants and thongs, and they're worth heaps. And
I don't even own a pair of shoes.
You know? But we've got lots of our tenants are so many different demographics. We've got IT people, doctors, you name it, and down to your waitressing staff, your retail staff. You name it. We get all sorts of tenants, but it's really important to vet the tenants during the process. And
one thing I've noticed over the last sort of few years is that the quality of the tenant has become much better that we're getting in the property. We're getting much better quality tenants, lesser amounts of trash properties and things that go wrong.
You need to weed it out.
Like
I look at everything. I'll look at all the normal things. So, you know, you do your background checks, make sure they're employed, they've got some sort of income. It doesn't matter even if they don't, you know, if they're a Centrelink recipient, that's fine. It's great. But as long as they're paying their rent on time, that's all we worry about. That's fine. But I do a lot of background checking. There's the tenancy database, and make sure everything comes back clean and there's no ugly stuff in their past. And
and trying to make sure that, you know, if there's there's two people turn up to the inspection, we want to make sure that they're both handing over the details
exactly
for the lease to make sure we can, you know, screen them and make sure that they're not trying to hide a bad tenant in the property that's, you know, really handing it to someone else.
Exactly right.
Cool. What do you do? Like, so you do the leasing of it, but what about like the routine reports? Or what do you do on a quarterly basis? Or
so we do our rent reviews and we do our routines. So there's something that we do on a regular basis. Our lease renewals is another thing, but routines are really important because you want to protect, once you've got a tenant in there, you want to make sure that they're treating the property correctly as well. So we get in there at 3 months and we check that they've settled in okay, and then we get in there every 6 months thereafter, and just check a lot. It helps for maintenance as well. So we check things like, you know, the bends under all your wet areas and stuff like that. Make sure nothing's leaking or nothing's gone unreported. And then we can put the landlord on a maintenance plan. Absolutely. Cool. But just making sure, it hasn't been trashed there. Keeping it clean and tidy.
Awesome. And what sort of trends like that you're seeing? Like, obviously we're here in Sydney. We've got, you know, staff on the ground in all different locations, in really small towns, big towns, all throughout New South Wales and Queensland. What sort of trends are you seeing right now in the Sydney property market? Like,
look, rents rising for sure. They've literally risen everywhere. In some areas, though, not as much as others. So some areas are rising significantly. I think a lot of those areas too have got a lot of international people coming through as well. So you see them just go sky high.
So what sort of prices, like on what would be the upper end of rent increase that we're seeing at the moment as an average?
Look, some of them can be around $20 is where we start, and that's actually a good thing because that's where we know that we're meeting the market, or we've met the market in the last 6 months. So we're spot on with those. But we've had everything up to $100 a week. $100 a week, I think, is the most that I've seen in New South Wales.
So if you had $100 and let's just say you got $50, right, and you've got 10 properties, there's $500 a week extra. You know, that's just this time around. And what about next time in 6 months or 12 months time? And that's the importance of working with the investors to be pro-investor, not
absolutely.
Cool. What are you seeing about those, like the more migrants and international sort of travellers? Is there more of them coming in now? Or?
There is. And we're seeing them in certain areas too. So the areas that they are going to are literally the rents, because everyone wants. Absolutely. But the rents are going through the roof in those particular areas. So, and they're not too close, you know, not too far from our office. Some of them, but
I love seeing it because not only like I see my investors' portfolio from property management being an extension of like my own portfolio. And if we put up someone's rent by $10, most real estate agents like, oh, the tenant's going to complain to us, all that sort of stuff. But if we put up 1,000 rents by $10, that's an extra 10 grand a week. 52 weeks, that's $500,000 a year, you know, and eventually, you know, that cash flow comes back to us. So the more we can push up our owners' positions, the more that they're going to be successful, the more they're going to be able to go buy properties, the more servicing they've got, the more cash flow that comes through us from collecting more money. Exactly. Yeah. So, any other thoughts or feedback or anything like that you want to share with the community?
Yeah, no, not really. I'm just, if anyone wants to call Blink if they need a property, you know, managed, give us a buzz, and we can talk in depth.
I'd actually go to the point of saying, if someone has a property and we don't manage it, you're going to be giving it to a normal real estate agent, right? We do a job that's far superior, I believe, than the average real estate agent. So if you have a property and it's not managed by us, I feel like it's, you know, you're doing yourself a disadvantage. So reach out to Andrew, reach out to the team. There should be a link in the description here. And I forget what else I was going to say. I had something very important in my head that I was going to share, but I was going to actually ask. So if someone was to bring their property over, right? A lot of people think they have to wait until the tenant moves out before they can bring a property over to Blink. How does that work?
Yeah, no, not at all. You bring it over. It's actually a really easy process.
What would be the process?
Well, you would bring it over to us. So you would talk to Chris. Chris is the person you would deal with in that case. And he will get you started with Blink. But it's a really easy process. We basically just, you know, collect keys, collect file from the agent, get to know who's in the property currently, so who the tenant is, and we go from there. So we would pick up. Yeah.
So looking at it, if you have a property and you're thinking, okay, I've got to wait until later to bring it over, I can't bring it over, I've got to wait for the tenant to move out or whatever. The process is basically you contact the team, speak to Andrea, speak to Chris, speak to Max, have a chat to one of them, speak to any of my team in Queensland. I think there's about 15 staff just in the Gold Coast, plus we've got them scattered all throughout, you know, whether it be Cairns, Townsville, Mackay, you know, inland. Speak to the team. Basically, you just need to sign a letter of engagement to instruct us to work on your behalf. We can then contact your old agent. You don't even need to go and call your agent and say, "Hey,
don't need to do anything.
You know,
we do that all for you."
Yes, it's like an email, we can bang, see you later, and we can take care of the rest of it for you. The thing about Blink Property is that I am personally the licensee of the business, so I am the one, you know, that's looking after it. So, you know, you're trusting any sort of Tom, Dick, or Harry to manage your properties, and they're just collecting the rent, they're doing the routines and all that sort of stuff. When it comes to Blink, we've got a team that's handpicked, people that are investors themselves, the people that get it, they're thinking like an investor, they're looking for the best outcome for the investor, and thinking with the big picture in mind, not just, you know, hey, we're getting $10 a week rent for you extra or whatever.
It's actually a really easy transition. If it's already got a tenant, it's
it's much easier when it's got a tenant. So click on the link in the description, and if you do have a property you want us to manage, or you know you think could do with a higher rental return, or could I push the rent up an extra $10, you do have the questions, reach out to the team. We can have a review of it and go from there. Yeah,
give us a call. I mean, we're happy to even give you, you know, our opinion on a property that you're currently getting managed from someone else and see what we can do for you.
Beautiful. Awesome. Well, these videos keep cutting off tonight, and I just want to make sure we don't get cut off again. So I'm going to go to answer some questions. I know there's not many questions because the videos keep getting cut off tonight. So someone said here, Facebook checks for tenants. Look, I don't know what you can and can't do, but I do think it's important when you're getting involved to make sure that, you know, if you got someone there putting pictures of getting smashed every night and bongs and, you know, whatever on their Facebook, then that's a red flag should, you know, scream out to you. So, you know, there is different levels of doing checks. We do rigorous checks to ensure that the tenants are, you know, secured, they're not telling us lies and, you know, all that sort of stuff. We've heard of banks, right? I'm just going to use banks, right? And the way that a bank would view, you'd think that the bank wouldn't go to your Facebook page, right? I was talking to a lender, someone that's in the part of the lender, and the person getting a loan from the bank got rejected from the bank because the credit assessor went onto their Facebook page, right, and checked their Facebook page to see what they had, and it showed that they had a kid, right, and there was these buying of things from like baby bunting or something like that, and they rejected the loan saying you've got a kid that you haven't disclosed, right, but it was the guy's niece, right?
Oh no.
Yes, and then they wanted restitution for it, whatever. They wanted to be compensated for it, and it can be good, it can not be good, but it's important to understand, because if someone's saying something and they're not, right, it's like someone going, no sir, or yes, right? And I was just looking at my head, I was meaning to say no, right? But if they're saying yes or no, you can tell, do those checks. You want to make sure you're doing in-depth checks, and we want to treat this like someone. I always look at the tenancy application. I think of the tenancy application very much so like a loan application. And those people, they should be selling us. Why should we be accepting them to be on? And if there's ways that we can do checks, and we want to be very thorough with those checks for everyone.
Absolutely.
So ultimately, if we put a shit tenant in your property, we've got to manage to get rid of it, and
for sure. And that's a long process.
Exactly.
Yeah.
Jem just said, what is the Blink's property management fee? It is different per location, but it is very much in line with real estate agents. I actually think on most instances we're probably cheaper than real estate agents. So reach out to the team depending on what the property is, where it's located and all that. Because it's not one size fits all, and I don't feel comfortable going into that on Facebook Live. People will be like, oh, this location, that location. So reach out to the team, and we're very competitive with our rates of what we charge. Julianne says here, what happens at a routine inspection? Do you take photos for the landlord, etc.? So
yeah, absolutely, we do. Yeah.
So how often, like, let's say we go out today and do a quarterly or biannual, depending on the preference of the owner. What would the owner get if Julie bought her property over to us? What would she get as a report to see a property?
Yeah. So you get a routine inspection report at the end of that. We definitely do take pictures for you. So you get a general picture of the room itself so that you can see how it's being kept in terms of clean and tidy. And then you get specifics of your assets. So things like your ovens, your stoves, the inside of your oven, your sinks, anything that's an asset within the apartment or the house. You get specifics of that, and then we let you know if there's any maintenance due. So we ask the tenant as well if they've got anything that they haven't yet reported. And we have a look ourselves as well for things like the visual kind of maintenance that we can see, and sort out a maintenance plan for you. So we put suggested maintenance on the routine inspections as well. So something that doesn't require immediate attention, but may down the track. So